Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 30th, 2017. Hope everybody had a great weekend. I wanted to do an update of some of the things that I'm watching for this week. We'll start with gold. I did an extensive coverage on the U.S. equity markets on Friday, so I'll touch on those at some point in this video just lightly and highlight some of the things, the other things that stand out right now. So far, this Euro US dollar daily chart that we're looking at here has played out. It has played out to the technicals very well and very close to, well, pretty much right onto my scenario. Hit the first target. We bounced up to my bounce target, the very top of the bounce target zone. Since moved down, we broke that 117 support level, which was the first target. You can see an impulsive move, confirming the validity or importance of that level. And we're not far from my final target zone now, and we still very well may get there. In fact, just based on this chart, if I have to look at the chart, because that's all we can really do, I'm not a fundamental analyst, at least when it comes to currencies. There's just too much there, and that's not my cup of tea. So I lean heavily on the technicals when looking at currencies. Um, but we can look at here on the 60-minute chart, and we can see what appears to be a bear flag pattern. So this would actually, if we get a breakdown there and a thrust, even close to even half of the measured target. This is a measured target. You have a bear flag. You take the flagpole is the impulsive move down leading up to the formation of flag. A flag is a consolidation pattern, a little brief consolidation or continuation pattern. It's known as before a breakdown and then another thrust lower. So excuse me. Again, that would take us down. It would project beyond my final target, but I don't think we're going to go that low. I don't see that much more downside in the euro. But as of now, this 60-minute chart's bearish. You can see the PPO here. My trend indicators are still bearish, coming up to test that zero line with the 90 EMA being below, as well as this 1333 histogram. Very often, back tests of this level will act as that zero line will act as resistance. Now, if we get above it, if the trend indicators get above there and print a solid 60-minute close, especially a few closes, and we flip these trend indicators back to bullish, well, then the correction may be over. Again, this is a daily chart. There's a little more downside, but certainly, and again, I don't very often or rarely trade currencies. I use this to help align with my analysis for gold. I see very little downside. Now, with that being said, let's take a look at gold. We'll start out here with the 60-minute chart of gold futures. Just simply a series of these divergent highs. And you can see the negative divergence on the 60-minute. That's bearish after the trend line break. Remember, divergences in themselves are not buy or sell signals. I've been pointing out these most recent divergences since right here, and we continue to make a divergent low. In fact, I need to move these lines if I can do that there. Well, no, try to draw it. You can see what I'm talking about there. So there's the most recent divergent low. Buy signals come on a breakout of some type of technical level. Maybe we could put a downtrend line here, a minor downtrend line. We might be able to extend it up there. I'm not crazy about either because there's not a lot of reactions, but you can see it has the nature of a falling wedge pattern, just like we had a rising wedge pattern here. We had similar pattern down here, and so there it is. We have a divergent low, and we're also very close to that previous reaction low. In fact, I mean, just within basis points of making an equal potential double bottom here on the 60-minute time frame. So the near-term outlook, in my opinion, for gold is bullish. And what I was trying to get at with the euro, although there is a very strong correlation between the U.S. dollar and gold, or that euro US dollar chart just as well. You can use that or the dollar index. Um, there are temporary disconnects, and if my analysis is correct, and others see it too, it's not unusual to see the gold buyer step in anticipation of a reversal. In other words, not trying to wait for that very bottom in the euro, that little bit of downside that I see there, but step in now. So point being that I'm near-term bullish on gold, not yet adding this as an official trade idea, but I wanted to share that for you guys. I think there's very little downside. It looks objective, maybe a buy signal there, maybe even go low here on this double bottom with a stop not too far below the reaction lows. And of course, you can trade GDX. GDX, you get more bang for your buck. We'll take a look at that real quick. Okay, this is the GDX 60-minute chart. So we really, if I could add a line here and really show you a divergent low, it's just barely there, but it's still there. As long as you have prices making a lower low and the indicators either making higher lows or equal lows. In other words, this is not making a lower low yet, excuse me there, then we still have positive divergence. Some people refer to this as flatline divergence if one of the indicators are pretty much equal lows. Either way, there's a little minor uptrend line. So there's your potential buy signal in GDX. You can see any or all of these are levels. I could see easily a move up here to this 23.91 level or so. And remember, I remain longer term bullish on gold and the mining stocks. So this could very well be. Let's just jump out to the daily chart. The end of this correction, this pullback. The longer term case. Even if I go to the weekly charts, I won't do that today. Try to keep this relatively short. But there's GDX at support. Gold, the charts are not super clear, super bullish, but trend indicators right now remain bearish. See, there's some conflicting information. You have the PPO down below the zero line. Looks like it's turning down. There's a potential. If you look at this, we're making a higher low in the PPO. So if we did happen to get one last thrust, let's just say that Euro bear flag plays out and gold has one last washout. That's where I'd be stepping in, probably adding GDX or gold as an official trade idea. I would really like to see a washout move, impulsive, little maybe a selling climax, marginal new low, take out these previous lows, put in some divergence down here on the indicators. And then you'd have daily positive divergence or bullish divergence on the daily time frame. So something that I'm looking for. So whether you want to, again, if you wanted to take a position here in the miners or gold, I think the downside is limited. I would set your stops a little bit below those previous reaction lows, both here on GLD as well as those gold futures I just showed you. The previous reaction low is not that much. So say a few percentage points on gold, maybe 3%, 2-3% below those previous reaction lows. That's minimal downside compared to the upside potential if this is the end of a correction in a larger uptrend that started back here in late 2016. Next up, biotechs. As you guys know, I've been highlighting this in recent weeks during these morning market updates. Is back here as expecting a correction, and on Thursday, I had stated in the trading room, closing my short on XBI. That's right here on this last red candle. Reasons being, I stated that we fell. Couple reasons. Number one, we hit support. That was a target. This previous reaction low. This was a level I've had on those charts for a while. We have reactions over here. So number one, we fell to support. Number two, we fell to support on a you rarely see this. We fell for the biotechs XBI fell from overbought. We were above the 70 level on the RSI, all the way down to oversold without merely a hiccup on the way down. I mean, we had a little hitch there, but that's pretty rare. So to see, and also it's reflected here in these candles. I pointed this out as well. We had one green candle, and that green candle was almost a flat close. That was a doji. So we had just persistent selling for weeks. You go back in time, you don't see that. It's very rare. We saw it back here. So anyways, oversold at support. uh, it just puts the odds against you for staying short. And therefore, that's played out in a bounce. We didn't have bullish divergence on the 60-minute chart, so I'll say it. I didn't go long the biotechs. I did highly suspect a bounce. I do have that Celgene. I think it's Celgene couple positions, but or that one I should say. But the biotechs had broke this trend line on the 60-minute chart. Again, we didn't have bullish divergence, but you don't have to when you're that oversold. You're going to get a bounce. Now, the same levels that were support on the way down, like this trading zone here. We're at the top of that zone now. In fact, we hit it in reverse today. We haven't cleared it yet on a closing basis on the 60 minutes, so that's resistance. Next resistance level would be right up here, 86.61, maybe a little bit lower. Call it 86.60, give or take. Biotechs are whippy, so all these levels, when you see a support or resistance level, they move so fast. They tend to have these momentum-fueled overshoots above and below support and resistance levels. But either way, I'm kind of standing aside this one now. I'll let you know. We'll watch to see what happens with the. I can't tell you if and when I'm planning to go back into those short, but at this point in time, I just would rather stand aside from that as far as a sector exposure. And again, there's exceptions. Celgene, as you guys know, that's an official trade idea. Playing out, nice so far. We had that quick bounce target hit for just a quick 1 hour trade. There's that. Where'd I have it on another board here? That's what it was. I made some updates that day, either in the trading room or the front page. This was a 1 minute chart. So the day, we went long here. We hit that bounce target almost perfectly, reversed, and there it is again. Now, that bounce target again is resistance. There's that level 195. There's the daily chart, and so we already hit that. We came back down, a little more selling, a little more shakeout, and we're pushing up against it. And so remember a resistance level, and I wanted to say this: the actual resistance level is at 101.10104. And it's fairly well defined back here. And now we've tapped against it a few times. That helps to validate that level. So if you're long this one, or if you maybe you didn't want to step in that day to catch a falling knife, I get that. Some people it's not their cup of tea. But the next buy signal would be to see a break above that 101. 04 level, maybe give it a few pennies, but roughly 101, especially on volume. You want to see volume come in. You want to see an impulsive breakout, at least a 60-minute close. If you get a daily close, even better. And it's going to open up the door for this T2 swing target. Okay, and I'm also warming up to crude here and the energy stocks. Some of the potential things I pointed out recently, we'll get to in a second here. We're seeing some we may have seen the end of the correction here for this divergent high. It wasn't very sharp. We had a divergent high at this point where the crosshairs are. That was just a slightly lower high. So there's your negative divergence, just like you had back here. This one played out for a pretty healthy correction, but we had bullish divergence on the 60-minute chart. We popped up there. And anyways, either way, we fall into support. We found support right here at that 50.78 level. You can see the levels marked back here. And I'm not crazy about inverse head and shoulders patterns or head and shoulders patterns on intraday time frames. I know a lot of traders trade them, but when you read up on those patterns, most of the textbooks, those are patterns that should form over weeks, sometimes months. They're larger topping patterns or bottoming patterns in the case of an IHS. And an IHS, inverse head and shoulders bottoming pattern, should also come after an extended downtrend. But with that being said, again, a lot of traders trade them, and sometimes just because of that alone, that may drive demand. So this is the pattern I'm referring to here. I didn't draw that line. I drew it a little high there, but that would have been your neckline about right there. And there's your right. So your left shoulder here, your head right here, right shoulder, and a pop up, maybe roughly a back test. We came in a little low. Again, it's a little sloppy. Just wanted to point that out for those of you that might be interested in that. So either way, I do like the energy stocks. I don't Sometimes I'll trade crude directly, but let's take a look at the energy sector. Okay, in recent weeks, I've been harping on the energy sector. First being bullish and long that, then being bearish, expecting correction here. Largely focus on these 60-minute charts. Here's my trend indicator. We had this uptrend line broken. We traded sideways for a while, and then the move started to play out. So I told you I wasn't expecting a very prolonged pullback or deep pullback in energy stocks, and this certainly has satisfied what I would have expected. Not to say there couldn't be any more downside, and I can tell you this right now: the 60-minute trend indicators are still bearish as of now. They're below the zero line, the 1333 histogram and the PPO on the 60-minute chart here. However, I'm thinking that this correction may be over. That's XLE. Here's XOP. This one we can see now, a trend indicator has flipped over back to bullish right here. So let's just circle that. So both my trend indicators on the 60-minute time frame are now bullish. We're seeing a nice bounce back in XOP, and we certainly saw, a pretty healthy correction, especially for the scope of these 60-minute divergences. That is more than enough to satisfy that wedge. It's beyond the wedge projection. And you look at the daily chart. Remember, we were long here. It was an official trade with, these were the two official targets, potential third target. And then it was this trend line break, which is the same as that 60-minute trend line. So this is more than played out for the pullback that I was expecting, especially due to these extreme overbought conditions. PPO on this daily time frame, you can see this is bullish right here. This is a trend indicator on the daily time frame as well, when that signal line, the 9 EMA, is above. And you can see the PPO curling up right on that zero line. So the trend went bullish here, and it remains bullish, and it looks like we're going to have a successful back test of that zero level. Now, where I think the most meat on the bone is, if you want to step in here, I pointed this one out in recent weeks. XES, which is the oil and gas equipment and services ETF. So far, that head and shoulders pattern I was talking about, right on cue. Nice symmetry here. Again, if you didn't catch that in the other videos, what we're looking at here is a left shoulder. I had question marks because when I first started pointing it out, we were still going down right here, forming the right shoulder, and I said it would be nice to see it, give or take. Doesn't have to be exact. You don't have to have perfect symmetry, but it's nice to see. And so far, we're seeing an impulsive move up. And again, I mentioned this one strategy, somewhat aggressive, but you step in when you see a potential inverse head and shoulders bottoming pattern. And by the way, that certainly meets my criteria here. You can see a prolonged, very vicious downtrend, vicious bear market in the energy stocks. Well over 20% drop, and the time span is over months. That is a nice inverse head and shoulders pattern. And the two other criteria, most people, things I've seen, a lot of people tend to neglect. What you want to see is advancing volume on both the formation of the head, the right part of the head, as well as the right shoulder. So from going forward, what you want to see is an impulsive move up and ideally on above average volume to help confirm this pattern. And so if you took a position here or you take one here now with a stop somewhat below that recent low, excuse me, your next buy signal would be on a break above the neckline. And this would be my minimum target right here. There's a couple reactions. You could take the measurement of the pattern, which is simply the widest part. This is how you calculate without pulling out your calculator and pencil. Just draw a trend line here, measure the distance of the head up to the neckline, and then you add that to where the neckline breaks. So you can see there's, as far as the technical projection of this pattern, there's a lot of upside. With that being said, these would be my targets here, 1850, give or take, and about 2050. Again, trend indicators look good, and there's a lot of individual components in there that are really setting up nice. I won't go over them all, but Schlumberger and check earnings. I know a couple of these are coming up. We have earnings coming up on some of these stocks. You can see divergence on the PPO, almost a double bottom here. You can see a little brief sell-off, but that one looks good. That looks like a bottoming play. Halliburton I really like. There's a perfect inverse head and shoulders mentioned there. This was a bullish falling wedge. You can see the divergence down there, but probably the bigger picture. And it obviously this is the second largest component, I believe, in XES. So therefore, it's not completely unusual that this mirrors that inverse head and shoulders on XES. So there it is. There's your neckline. There's your IHS pattern. Same story. You can take a long position here, maybe a little bit below the right shoulder, allow for another little thrust down. I'd give it a little bit of room. Or if you want to keep it tight, you can set a stop certainly under those recent lows. And then this would be a second buy point if that pattern is finalized, then we break out above the neckline. This would be my minimum target here, 50.56. Okay, and just to touch on the broad markets, and we'll wrap it up. A couple things to note. Don't forget that we have some big earnings this week as well. Last week we had 3 of the 5 FANG stocks report, and this week we have the other 2. We have Facebook. Facebook reports on Wednesday after the close. And interesting, when I looked at the other ones like Amazon, the ones that did report last week that popped real big, they had sold down into leading into earnings. Amazon, Alphabet, you can see that selling down last minute. So they had a big pop on their earnings. So far, a lot of that's being faded. You can see how much Google has faded so far, Alphabet. But here's my point. Interesting to note that Facebook rallied as if the positive earnings for Alphabet and for Amazon were its own. So it makes me wonder. We've just in the last couple of days, due to that sympathy rally, we've rallied them. Well, off the lows here, leading up to that. That's about almost over 6%. Who knows? Maybe they blow it out. Maybe that's all priced in. I think these are, I don't know what it is, a combination of shorts that are scared to have what happened to them if they were short those other FANG stocks last week. Maybe they're getting out. Maybe it's just the retail or institutional investors thinking, oh, well, Alphabet blew it away. Intel, so logically Facebook's going to, no, their companies have completely different business models. But we'll see. I just wanted to point that out that maybe a lot of any positive news or results from the earnings could be priced in, and well, we certainly know that at least 6% of that has been in the last three trading sessions. And then, of course, the other big one, even bigger, biggest component of both QQQ and the S&P 500 is Apple. Same story. You would have thought Apple reported last week, rallying 6%. So, even if they blow it away, at least 6% of that rally has now already been priced in. Let's just put it that way, based on where they were recently. So, again, they didn't report, but they will be reporting this Thursday after the bell. Watch that. Everything is still, all these divergences is just another divergent high right here. This one did play out for a correction, as did this one. And there's no reason in the charts right now that this one won't, unless those divergences are foiled. Sometimes that happens. We can pop up big enough if we can take out these, the negative divergences that are in place. Maybe Apple goes on, but as of now, the chart to me indicates that the likely trend reversal coming in Apple. So those are some things to watch for this week. Again, probably expect volatility one way or the other. And then just back to QQQ. Again, I covered all this last week. This is just, big pop. Still very much a divergent high, not even close to having these divergences taken out yet. And these are long spanning divergences. It's a daily time frame we're looking at here. And we'll take a look at the 60-minute chart here on Qs, pushing the upper limits. And remember, QQQ, by pushing the upper limits of the divergences, I mean these trend lines are flat right here. So we have flat line divergence or negative divergence. If the Qs push much higher, we won't. And again, the developments that I found most interesting on Friday was the NDX equal weighted index. Also things like, you look at the Dow, for example, on Friday, the Dow Jones Industrials, because you don't have all that influence of those FANG stocks, at least not to that extent, was only up 0.14%. It was virtually flat. And almost all these indexes had sympathy buying just from those big FANG stocks. I already went over that last week. So here's the NDXE, down again red today. It did close up, I should clarify. After I did that video, it closed up positive. The NDXE closed up 0.63% on Friday, the equal weighted NASDAQ 100, if you guys aren't sure what I'm talking about here. The NDX, the Nasdaq 100, closed up 2.91. I don't think I've seen that disparity. Can't recall it in a very long time. And again, that was all case was made on Friday for the fact that it was just a handful of stocks doing almost all the heavy lifting. Again, and this is following through today. We're up as I'm talking here. I'm looking. The Qs are trading up 0.4%, and yet we have the equal weighted Nasdaq 100 trading down. There's what that chart looks like. It's telling a completely different story. Not at new highs. But it's still above trend. That's the bottom line. It's above trend, so we don't have any sell signals. On this 60-minute chart, it is below trend. Pretty decent defined trend line. One, two, three, four, five reactions broke down. There's that R1 level I mentioned on Friday. That's where we're stalling here on the equal weighted Nasdaq. Trend indicators remain bearish, so something to watch there. All right, we'll wrap it up here. This is IWM. IWM still below trend on the 60-minute chart, and for you small cap traders. So let's just again earnings. That we're in the thick of earnings seasons. Earnings season. We're starting to get. We'll have turned that corner at least with the Nasdaq by the end of this week after Facebook and Apple report. So, by Friday or end of day Friday, we should have a good idea where this market wants to go. And there's IWM, there's the divergences, extreme overbought conditions. So, this is again going to be a theme of to be continued, just as it was last week when I, said those three fangs were reporting. The market went into a holding pattern right before that. The day before, it was in a holding pattern. They certainly reacted, at least those stocks to the upside on the following day after they reported. Now we'll probably see that again to some degree or another with Apple and Facebook coming up. Oh, by the way, Tesla also Wednesday after the bell. We have Tesla, Qualcomm, QCOM. Um, Thursday besides Apple, we have Alibaba, BABA, Chesapeake Energy. So, if you're trading any of those individual energy stocks, especially those are high flyers. Be very careful. Be cognizant of when they report earnings. There is a link on the homepage to check earnings. And suggest you do that, especially if you're somewhat risk adverse. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.